Hello everyone, welcome to the Y-Axis Pod. I'm your host Tristan Yver, and today I have here with me Akshay. Akshay is a co-founder of Superteam, and now he is an NCMO of Solana Foundation, which means that he gets a lot of shit done, and it's great to have him on the pod. Welcome, man.
Thank you for the flattering intro, Tristan. Great to be here.
Yeah, great to have you. I'd love to hear a little bit about what your role has shaped into being at Solana Foundation, what you're working on, what your focuses are, and what this NCMO sort of title means.
Yeah, sure. Yeah, look, I think sometime mid last year, there was an opportunity for me to be the CMO of the foundation, and that was sort of like the original title of the role and the scope of the role, which is sort of like a regular CMO job. I just felt like at the time, and I still do, that blockchain foundations, especially if you're an L1, should not have CMOs because they can end up centralizing the narrative about what the blockchain is supposed to represent. And that doesn't mean you don't do anything and have credible neutrality, which is sort of like distance from everything good that's happening in the ecosystem. It is that you should be able to lean into every part of the ecosystem, regardless of, it means that you should be able to lean into every part of the ecosystem, from payments to DeFi to DePIN to, the meme coins, whatever it is, right? Institutional finance. And so I kind of think of it like this meme where, there's a bunch of blind people touching different parts of the elephant, trying to guess what it is. Somebody touches the tail and says, oh, it's a rope. Somebody touches the side of the elephant and says it's a wall. Somebody touches like the tusk and says it's a spear, and so on. And so I feel like Solana is like that too. It represents a diversity of things to people. So unlike a company that has to anchor itself on a single message and a single brand, it has to mean one thing to everybody. Solana has the luxury of meaning many things to many different people. So in that sense, it's different from a company. It looks more like a city. Just like New York City is like different things to different people. It could be, finance for people on Wall Street, art for people in Brooklyn, and so on. And so there's like a diversity of identities and backgrounds of people who come and thrive in New York City. And the one single message they can all agree on is that I love New York City, right? And so the goal of the marketing team and my vision for it was essentially to have the ability for us to profile every part of Solana City in a way that it's bottoms up and it sort of retains the diversity of the things happening on the network, while also steering us towards the next iteration of what blockchain should do, right? And so it's like a careful balance. You have to react to trends and you have to predict trends. And part of the reason we said, okay, what should this be? Oh, chief vibes officer, chief, whatever, we came up with all these different names, and none of them really had, they didn't have the curiosity that something like NCMO spikes. So we said, okay, why don't we just start by calling it what it's not? Mm-hmm. And that should raise questions, and then we'll answer those questions. It's okay that if we answer them over and over. And to cap it off, the point was, okay, everybody is marketing for Solana, the ecosystem, right? The users are our best marketers. The developers and founders are the best marketers for developers and founders. And so you should give them the voice and find a way to help them build distribution. And then the aggregate of all the distribution you have across Solana-owned channels and Solana ecosystem-owned channels becomes the marketing. And that becomes the marketing engine, as opposed to building a marketing team within the foundation and centralizing that. And as you know, my background is that I've been a big fan of just pushing stuff outside the foundation into the ecosystem, either through grant funding or other initiatives that perhaps some of them are profitable initiatives and they can go raise external capital. And so it was consistent with that bias to push the marketing out into the ecosystem to scale it.
Yeah, I mean, it seems very consistent with everything you guys have been building, even on the super team side for a long time. And it seems to have been working very well initially on the super team, where you guys were able to get all of these leaders around the world to come in and do what you were saying and kind of take ownership and take leadership to build out the Solana communities within their own countries and jurisdictions. But I've actually seen it now with the NCMO thing, where people are putting it in their bio on Twitter, people put it on their handles, people really take it to heart. And it's interesting because I think it makes a lot of sense for a distributed system to have the participants of that system feel like they're empowered to make change or bring progress or be a part of it in a way beyond just holding some of the tokens or using some of the apps sometimes. And before I jump into the meat of this, which is a lot of the Solana stuff that you're working on, I would love to go back in time a little bit and sort of hear how you guys developed the model for Super Team, because now it's being emulated in many different places. It sort of has proven itself to work quite well. But I think when you guys were developing and coming up with it, it wasn't clear, it wasn't intuitive that finding external leaders to drive things would work versus just doing everything from a centralized focused perspective.
Yeah, I mean, I think the motivation was largely colored by my experience at Uber, where sort of the way we did approach international expansion was as these distributed teams of 3 people, like running a market and launching the cities. Now, it was a little bit different in that Uber still had a common product being shipped from SF. And so there was like a lot of, it was really effectively like the part of the same organization. And there was, the common brand. And so it was much more closely integrated. But, in the case of Solana, like there is no reason for the foundation to be closely integrated with people who, from an organizational perspective, who are growing these markets around the world for developers. In fact, we should find the best contributors in the ecosystem, find a way to entrust them with responsibility to grow the ecosystem further and scale in ways that the foundation would never be able to. Because there's sort of like 2 options, right? When we started international expansion, I was actually an advisor to Solana Labs first. It was even before the foundation was formed, and then moved over to foundation when we set up the foundation. But the question was, hey, should we have people be part of Solana Labs and later Solana Foundation and have a head of India, head of Germany, head of UK, sort of have like an organizational structure like a traditional org would? And it just felt like a less attractive proposition to me because they would be burdened by all the bureaucracy and the sort of like the legal and comms guidelines and all these things that would slow them down in the markets they're in from acting in the best interests of that market. There's no reason the UK should be, hopping across time zones with, wherever we are around the world to make decisions for what is best for the developers and the users of the UK. And so the best way for us to give effect to this was find somebody that I like to say we hire community founders, not community managers. And the analogy there is, in 2013 when social media came around, people would hire social media managers who were young people who just understood social media like it was this monolithic thing. And they would just sit on the marketing teams. They would have very little say and they'd have some small budget to go execute. But the people who ended up winning were not the social media managers or the teams that set up a social media manager. It was the social media founders, like influencers, companies like Warby Parker, who saw the new medium and said, holy shit, this is everything. And they went all in. And so similarly, I think crypto projects do this a lot where they hire a community manager and hope it works out. But actually, when you look at crypto, you realize that community is the whole thing. The idea is that you can have, a set of producers, contributors, from outside your organizational structure. And that is the whole thing. And so you're like, okay, so that we should just bet on that really hard. And so we go and find folks who are community founders. So set the bar really high for hiring, even though it seems like somewhat of a low status role, just like social media manager was a low status role. But we're like, hey, no, this is where it's going. It's going to become high status and high leverage. It's already high leverage. We're going to close that arbitrage and take advantage of it. And so we went and found the best founder adjacent folks who would be a good thought partner to a founder, and then gave them the responsibility to grow the markets in that we launched. And so pretty quickly we got up to 10, 12 markets. Over time we've reduced some that didn't perform as expected, and that's an increased investment in others that have performed really well. But that's part of a living and breathing organism that has ensured that the ecosystem can grow without the overt efforts of the foundation. So the kind of relationship we enjoy with the super team leads is that of a board and a founder, right? where we are checking with them quarterly, thinking about things like what are the initiatives that are valuable at a global level, what are the things like budgets and operational efficiency and what they're focused on. But really, they're working with their community to build out that ecosystem.
So one thing that you touched on, which I think is really hard and also very valuable when done right, is finding these folks who can be the community founders. How do you do that? What type of characteristics do you look for? Did the process develop as you talked to more of these people across time? What was sort of the key thing that you would look for in individuals?
Yeah, I think the fundamental thing that you need somebody to be able to be a community founder is someone who can get both like a scale of reach and depth of reach. And they should be able to build a team around this, right? So think about what you need for a community. Basically, you want to reach everybody in your city. And if there's a technical bench strength in your city, you want to be able to reach all of them to attract developers. So that's content. Then you want to have these people respect the person who's running the community and participate in the events and the smaller sort of weekly community calls, these rituals of people checking in with each other's work and sort of treating them as a peer. And so you need someone who understands how to build the rituals and build the community aspect of it. And then you need someone who can be able to deploy capital effectively, whether it's to host an event or to do some public goods funding, whatever it is. And so it's content, community, and capital. That's sort of like the funnel for that we need to execute against. And so I like to say people who can ship, like good engineers are those who can ship good code and like good software that replicates easily. And good community founders are those who can ship good intellectual software that can replicate easily, right? Like as soon as you come in, there's an onboarding and you get the installation software of how to contribute to Solana, where to go, who to meet, what is the most valuable thing. And so if you can build that efficiency into the onboarding engine, then it's really up to the people to shine, right? Who are just helping folks find their way into the Solana city.
How do you measure if a community is growing properly or not?
Yeah, great question. I think there are really like a few key metrics worth watching. A community is basically measured by the strength of the relationship between the nodes, right? So the first thing that we did originally was we capped the number of members you can have in a community to 150, which is the Dunbar's number, right? Which is the number of people you can know by face and name in your lifetime. And so we said, well, we want everybody to know each other and have empathy for each other. We don't want this to be a large internet community of anonymous folks. We want people to know each other and meet each other in that city. And for that, we have to be able to create a tight enough community. And so we capped it at 150. And then you start to measure the output of that ecosystem, of those 150 people. And so you have an audience of users, but you have a community of producers. And so you want to be able to measure, what their output is on a global scale. And that typically starts with the hackathon. And so you say, well, the Solana Global Hackathon is a perfectly, sort of positioned opportunity for new people entering Solana to show where they stand at a global scale with other new participants. So it's like the incoming batch of talent goes through the hackathon to find out where they are competitively in the world. And so that's one way to measure like how good they are. Another way to measure it is once they get in, whether they start finding jobs in the ecosystem, it becomes easy for them to help other ecosystem teams that are perhaps looking to expand into those markets. Like these teams now coordinate permissionlessly across borders, right? Like somebody wants to launch in the UK or Vietnam, and those super team leads are in coordination with those ecosystem teams directly. And so that many-to-many coordination is really what you want without the involvement of the foundation. And at the super team level, you want without the leads being involved, you want the members interacting with each other and doing business with each other and producing stuff. And so I think you can measure that output in code, content, and generally the value they're contributing to the ecosystem at large. Through the jobs they're doing, through bounties that they may participate in, or otherwise building, projects that may raise external funding. right? So those are some of the metrics we measure on a quarterly basis with the leads.
It seems like that all makes a ton of sense, by the way. And then each lead has to kind of like fire and hire the community members of their super team, depending on if they're doing stuff or not. And in that sense, it's like running a real company, which I find really interesting because you kind of have this intermix between the two things. But one thing that I think is really cool is it seems like this sets up a field with a lot of seeds, and it gives them the initial water, perhaps a little bit of fertilizer, and it sort of gets the process going. But as you know, like growing things takes a lot of love and energy and effort, obviously from the plant side, but also from the output that you're putting, or excuse me, the input you're putting from the outside. How does Solana then come, or Solana Foundation then come and find the plants that seem strong and really encourage them to be able to grow to their full potential? Because one thing I've realized over time is that things seem to only really be successful when the people working on them decide to commit full time or to dedicate their life to it. It can't be a side hobby. It can't be like, maybe there are exceptions, but they are certainly exceptions. So how does Foundation come in and really encourage the right people, right groups to build important things?
Yeah, I mean, I think the commitment to full-time thing is one that the market has to create that opportunity, right? What we have to do is make sure that people who are incredibly talented and could be successful within our ecosystem know about what Solana is and how they can participate. That's the extent that we can influence that. The market takes care of the rest, right? There are all these VCs, all these treasuries of all the various projects looking to fund various initiatives are all bids on talent, and that bid is that bid is fulfilled by an ask, right? And so the talent has to go fulfill, or can choose to accept any of those open bids in the marketplace for individuals to contribute to that. And that's what we see happening, because for us, success is when these folks go and find a full-time job in the ecosystem or build something that gets funded by investors in the ecosystem, because that is the highest signal. Like getting funded, like earning money or getting funded is the cleanest signal of merit, right? By capital pools that are not the foundation and not public goods funding. And so our goal is to help create that market for talent by having those individuals who are talented in each market find their way into the ecosystem. And it sort of ends there. And if we don't end there, then we start interfering in market forces.
Right. So you don't want to be a subsidizing force necessarily. You just want to be a connector. So like if there's capital, you can connect them to perhaps not even the teams directly, but the folks who know the teams, and then they can do the introductions and so forth. Things like that. Yeah,
exactly. So the way to think about it is like we want to turn the search function to zero, like the cost of search to zero within the ecosystem, right? And so you should find what you're looking for with a few clicks, whether you're a founder, user, developer, or a marketer. And if we succeed in doing that, then the market will take care of the rest. Like incentives will take care of. Crypto is capital abundant anyway, right? And at the highest level, the thing that every L1 ecosystem is trying to do is acquire capital and labor into its network. And capital is cyclical, and of course you have to stay relevant from a product perspective and all of that stuff. But what's underrated is the acquisition, and there's market makers and there's all these playbooks of how to acquire capital into your ecosystem, how to acquire the marginal dollar, whether it's from institutional investors, retail investors, whatever it is. There's all these playbooks and threads and all this. What's underrated is the acquisition of talent. And I would argue many of the L1s or other chains that were relevant that aren't relevant anymore certainly is because of some bad or outdated tech trade-offs, but it's also because they lost the young talent, the incoming ingress of new talent into the ecosystem, and a lot of the other folks who've been around for a while, perhaps retired, moved on to other things, or for whatever other reason, stopped contributing with the same ferocity that they were in the previous cycle. And so for us, talent acquisition is equally an important piece of this, and that starts with education. And making sure folks are aware of like the the career, if you want to make a career, there is an opportunity here. Now, of course, it's so noisy, and most of what people hear about crypto in the beginning is kind of like adversarial, and so you have to work through all of that to find the best folks and help them find the best projects. But I think, I'm still sort of an optimist on the idea that when you solve regulation and you allow bottoms up capital formation, the kind of projects you'll get are fundamentally going to change the society around us using a sort of like a crypto technology stack.
Okay, so you segued perfectly into where I wanted to go with this, which was essentially 12, 18 months ago, even further back, a lot of Solana's history, you had to pull someone's tooth to get them to want to build in the Solana ecosystem. It wasn't intuitive. It wasn't easy. It really took sitting them down and walking them through all the motions. For most people, there are people who, tried it and got it, but this was the case that I saw. That seems to have really changed in the last 12 to 18 months. It's starting to become a bit of a existential threat, I would say, for companies to not build on Solana at this point, because my view, at least, is that it's the most functional piece of blockchain technology for people to build products and software on. And I want to hear from you who are looking at this from the inside. What do you think caused that from one hand, and the other is, what does that look like right now? Is that accelerating? Has that plateaued a bit? What does the sentiment internally feel like when you talk to the external world?
I think the external world swings back and forth based on, what the dominant narrative in crypto Twitter is. Crypto Twitter is both underrated and overrated. It's underrated because it does have a material impact on what people think about a specific project or a company or a startup or whatever. In a very real way. Clearly, like, we're all discussing from the things that have a common frame. It's overrated because it's memoryless, right? And it doesn't have enduring effects in any meaningful way, because what is true today can be untrue tomorrow. And then you're like, okay, that whole thing that we thought was brand is not a moat, right? So with that caveat, I would say what's changed is really like prices going up give people the confidence that they're making the right choice, combined with people feeling somewhat de-risked for making the choice that they knew was always the correct one to make in the first place. Mm-hmm. It's funny how that works, right? Like the price chart sometimes just needs to confirm the thing that people are already thinking, and that helps them. Great. That aside, I think that one fundamental change is we have a new class of developers who are application developers. They're not infrastructure developers, and they're not sort of coming in with all these ideological preferences that need to be expressed in code. They're coming in with the sole intention of wanting to build a global application from day one that they can get distribution on without having to incorporate in every single country that they expand to, and just start making money for users using them. And so the cost of distribution is suddenly deflated, and you can launch a global product from day one. And you don't have to worry about all the infrastructure problems. That's all abstracted away. It's just like an app store. You just ship the app, and all you got to focus is on developing your app. So that new class of developers, who are application developers, intuitively understood the value of an infrastructure layer that abstracts away the complexity of building infrastructure. And they're like, yeah, of course, I don't want to build the app store. I just want to build the app. Mm-hmm. So I think those are two big changes that we see. It's just that the question that remains now is what is the design space in the application world that we can explore with the existing regulatory framework? And that still remains tight, right? Like, if you want to launch a meme coin, it's legal. But if you want to, bootstrap capital to launch, a coffee shop in your neighborhood, that's somehow like still not legal. And there's it gives you all the downsides of, the securities law without any of the upside, right? So I think the design space in that will expand, and that's the most exciting thing right now within the ecosystem, especially as the US takes a pro crypto regulatory stance.
One thing that I've that I've felt for a bit now, and I'd be curious on your view because you're probably closer to this than most, is that there doesn't seem to be that much top talent coming into crypto right now.
Yeah.
Do you think this is true? Do you think this is false? What do you think is happening on that front?
I think it really depends on sort of what area of crypto you're talking about, right? I think that statement is generally true, and there are a couple of exceptions. The first exception is there's a lot more people on Wall Street looking to essentially cryptofy their businesses, whether it's getting involved in stablecoins, whether it's tokenizing funds, whatever it is. I like to call it internet capital markets, right? Like they're realizing that, imagine if like you were building the NASDAQ, but it was internet native, and now you have a capital markets that are being built on the internet. How would you respond? And that's what we're figuring out right now. Like when social media launched, there are all these legacy media companies that were like, okay, now how do we respond to this? And so you're seeing some version of the same thing, so that we're seeing exceptional ingress of talent from the traditional finance ecosystem. The second, I would say, is policy. So there's a lot of incredibly talented policy folks who studied the history of finance, who understand the public policy objectives that a country would need to balance, between economic freedom and ensuring that investors are protected. Like there are all these interesting policy debates, that are first principle debates that we need exceptional policy people for, and they're getting involved. And the third area is fintech specifically. So I don't think mainstream tech is still a thing, but fintech certainly is, as they're realizing, because a lot of fintech companies are essentially wrappers around banks, and so they're tired of being that as well, right? Like they're just like a distribution engine for bank loans. And so for them, I think to be built around stablecoin starts to become really interesting, because they earn money on the float, they can lend stablecoin and have their own lending books without elaborate licenses, a whole bunch of cool product features that they would be able to do, participate in. So I think in those three areas, we're definitely seeing exceptional talent. In the grassroots developer community, I'd agree that there's some sort of stagnation. That said, look, the numbers always surprise me. Like we are just looking at the global hackathon numbers. I can pull them up right now. But I think there's something like 4,000 developers from around the world participating in this. And we've just announced it 2 weeks ago. So typically we'll end up at this run rate with 8 to 10,000 folks participating in this globally. That's 8 to 10,000 potential net new developers. Obviously it's a funnel. And so some part of them will actually end up shipping product, and some portion of them will end up staying and finding a home in the ecosystem. But that's how this works, right? This is a competitive process where thousands of people participate, and then a few tens or hundreds of people end up staying in the ecosystem and finding a home.
In many ways, I feel that Solana is ahead of the pack, and I think it's a conception that I may have held for a while, but it now seems to be becoming more commonly accepted. Is that something you would agree with? And I know it's always dangerous to be complacent, but what are things that you guys are working on to continue this momentum that you have up until now? Yeah,
it's always dangerous to say anything in an industry where everything changes every 2 years, and certainly every 4 years, everything resets, right? Mm-hmm. So I think Solana has sort of filled the reality perception gap, because it was perceived to be like this VC chain or whatever the last narrative was, and or more lately a meme coin only chain, all this stuff. That's the perception, and the reality is it's just the best place to build any crypto application, and so the best and the worst things will happen on the same chain. That's just inevitable, because you don't have a moderator; it's permissionless, and so you can get the best and the worst on one platform. And so what our job should be to try and modulate and give distribution to the best and help them succeed as founders in the ecosystem, and somewhat limit or find ways to make sure that anything that's being exploited in the ecosystem, whether it's socially, technically, become a one-way door that others can't enter through, right? So that's roughly the mental model. And so what I would say the efforts were focused on don't change as a result of any of the perceived success of the last 2 years. It really largely relies on founder acquisition and sort of product focus, right? Like get the best talent and focus on product, and everything else will take care of itself. And that roughly remains true. I would say regionally we may have we may have tactics that differ from this overall focus on a case-by-case basis. So part of the effort in the US is to take advantage of the adjacencies of crypto, right, which is tech, finance, and policy, and see how we can participate in those, and see how this new chapter in crypto in US crypto history can unlock those doors to build better product. Mm-hmm. And we're already seeing that, right? Like you're seeing fintech companies dabble in stablecoin. You're seeing Bank of America CEO talking about how they can participate in stablecoin architecture. You're seeing sort of like these funds like Franklin Templeton, BlackRock tokenize their funds on Solana natively to access global investors. And you're seeing policymakers take a much more proactive approach in engaging with the industry when that has never been the case, and the industry has largely suffered from regulation by enforcement. Mm-hmm. So I think the regionally it'll differ, and similarly, in parts of Africa, it's really about how can you get people access to stablecoin. That's really the number one thing they care about, right? In India, there's like a massive growing DeepIn community, and there's this new Finternet initiative that's becoming a neutral infrastructure layer that some of the people who built the payment system are working on. That's a neutral infrastructure layer for tokenization for the rest of the world. So there's all these regional idiosyncrasies and projects that are worth focusing on, but at the highest level, it's really acquisition of talent and capital, and that never changes.
So 2 questions there. I saw that there's a recent launch of a Solana policy group. What is going on there? What's the effort?
Yeah, so it's called the Solana Policy Institute, and the effort is it's an educational effort to participate in the policy making process that is going to follow this new change in posture towards crypto from everyone from DC to the SEC. And it's a nonpartisan effort. It's funded. It's meant to educate policymakers about some of the unique advantages of a network that is app abundant, right? So current policy efforts have been led by folks very competently by folks like Coinbase, but they're ultimately an exchange, and the kind of product that they will support will be different from the kind of products that will be supported within the Solana ecosystem, because these are on-chain, those are off-chain. These tend to be with a distributed set of startup teams that tends to be from one company, and so there's just a different ask on the policy side from many of the ecosystem teams for them to succeed, from DeFi to payments. And so the goal is to set up something that is, because the product is so differentiated, the policy asks from various ecosystem teams will also be differentiated, and you need to have an education effort that focuses on that, right? DeepIn as capital formation is like a pretty valuable piece of technology if it starts to succeed to bootstrap some of the infrastructure efforts that the US may want to undertake in this new chapter. And so there's all these peculiarities and strengths that Solana has that other centralized companies or other ecosystems may not. And so this is an effort to accelerate some of the education around that and see how the ecosystem can participate in some of the policy dialogues, especially as the doors open up to anybody who's contributing. Frankly, DC's doors have opened up and they just want to be educated on what's going on. And this is just a vehicle for us to get startup founders and ecosystem developers in the right rooms, because they are not following what's going on in DC on a regular basis.
Yeah, it makes a ton of sense. There's so much education to be done there. And I had a conversation with Lucas from Jito, and he was saying the same thing, that just having the opportunity to go into a room and explain what they're building, why it's important, why it's valuable, why it matters, is worth so much. Because if not, no one is going to do it. Because as you said, the folks like Coinbase have no incentive to deviate from the things that they care about and they need to focus on to talk about that. So I think that's very valid and something that sort of just needs to happen. My second question is on the stablecoin thing. So I think you very correctly said what matters the most in places like Africa and LATAM and Asia are what chain is being used for the different movements of stablecoins. I think those three different jurisdictions are mostly using Tron for no other reason than habit. There really is no good reason other than at that time it was the cheap chain for them to use for their stablecoin movements. How do you change that? It's crazy because I've been in countries in Asia where I'll OTC to some local currency, and the default for everyone is they'll give you a Tron wallet address.
Yeah, I think this shows you how the technology is not the only mode, and some of it is getting distribution early on. And to Tron's credit, they've done an exceptional job of sort of building the distribution in places where people wanted access to these stablecoins. That said, I think as yield-bearing stablecoins become real and people start to realize that there's an opportunity cost for holding stablecoin on chains that may not have some of that yield being passed on, or DeFi opportunities, or payments, apps, things like this. The application, the composability and the application ecosystem in Solana should ideally create a moat in the longer term as people get more educated to move into that. And I think that stuff will take time. Really, Solana has come out of like a 2022, right, a November situation. It's only been 2 years and some change, right? And so I think it's just a matter of time before like that becomes inertia in favor of Solana, especially as people get phantom wallets in all these places, and some of them are already trading meme coins or earning money in their phantom wallets directly. And so I think that network effect will eventually grow for this to become a thing. It's unclear that the foundation has a role here, because the foundation's role is roughly restricted to the technology, like validators and developers, right? And those developers could be grassroots developers or enterprise developers, such as engaging with Visa and Franklin Templeton, whatever. But they're effectively developers as far as network is concerned. And the developers go on to find users. We may every now and then participate in something or host something that speaks to users, but our core constituents are helping developers on the network win and helping validators on the network win, while decentralizing the network, right? So
is that something that you think could be changed for foundations outside of just Solana foundations in general, or do you think that is the role that they should take in the space?
I think that is the role. Like, focus is underrated, right? Like, focus is actually really valuable, and focus is not just like, oh, we have a focus on these 5 things. Instead, it's like, okay, we're focusing on these 2 things at the cost of these 3 things. And so it's usually a trade-off. And if you're not making hard trade-offs, it's not something that's not proof of focus. And so a network only wins if you get founders building apps that will ultimately go on to get users, because there are no real users for Solana, the network, right? Like, the users sit on top of like an application built, whether it's a wallet application, or somebody using a DeFi application, or a deepen application, whatever it is. Ultimately, they first become the customer of a wallet app that's created by an app while they interact with Solana, the network. And so the foundation's goal is to find as many of those folks who are taking shots at goal. Now, this may evolve over time. Look, the foundation's role has changed so much in the last 4 years that I've been here. And so, I like to say that the foundation should only work on things that the community is unwilling or unable to do. And what the community is unwilling or unable to do changes every 6 months, because, for instance, we dramatically reduced the number of hacker houses this year. Why? because ecosystem teams were hosting some incredible spaces, physical spaces for folks to congregate and code together, whether it's Mountain DAO in the US or a conference like Solana Crossroads in Turkey, all hosted by the ecosystem folks. And we therefore can afford to do less and focus our efforts elsewhere where the community is unable or unwilling to do, right? And so I do think that the foundation's role should be narrow and focused on first order participants. And if it has the luxury of time and resources over time, perhaps second order, like users, investors.
You mentioned that what makes a chain succeed are founders that build good applications for users, that build things that people want. Essentially, you have spoken to many founders. You speak to founders all the time. What are some of the characteristics that you see good founders share? What are things that you notice that make you think this person seems like a good founder, perhaps beyond the product element?
I think every founder is kind of like is unique in this idiosyncratic way that they're like the first sign is somebody does not have factory settings of opinions, right? Like it's like and they're typically strongly opinionated on something. They don't wait for permission to act. Those are like pretty clear signs that this individual is likely to be a good founder. So they're not looking for help. They're not looking for permission. They will work their way to and iterate their way to finding the right answer. And they're typically opinionated, right? And so they have a view on the world. And if that view on the world is, and that typically starts from some sort of identifying some important truth about the world. Many times that it may not be something that others agree with, but they have high conviction, and that's how you're only called opinionated if you have a contrarian opinion, right? If you have if you have consensus opinion, you're not opinionated. Like even though it might be very specifically opinionated, right? You might have very specific opinion. It doesn't mean you're opinionated, and you don't get called opinionated. So it's this weird word that gets thrown around, but basically means that you probably think something.
I mean, and do you think part of that is that you have to have that characteristic to identify problem spaces that haven't necessarily been solved or haven't been solved properly? Or why do you think that being opinionated translates into successful founders?
I don't think it necessarily translates to successful founders. I think successful founders tend to be opinionated because they like a lot of success in startups is about making like good decisions every single day over years. And if you went wrong in if you went wrong enough times in that fork of good and bad decision, like that startup fails, right? And so being fiercely truth seeking is actually quite existential to building a startup, because there are all sorts of incentives that are driving you away from the truth, right? It's what your heart wants. Oh, we only have 6 months of runway, therefore we should act like this. But the market doesn't care that you have 6 months of runway. The market cares about the product you just launched, right? Or it could be something where, oh, we should hire this person because they're so experienced and they'll probably tell us what to do. Or we should get this investor because they're so well connected and they're going to save the company. Well, the truth is they probably won't, and you still have to work your way to find. You still have to work hard to do the things, and you'll probably be more frustrated because you had a higher expectation and it didn't work out. So there's all these ways in which you can fall into the trappings of conventional wisdom, and a startup is about avoiding those and not being contrarian. Sometimes the conventional opinion is the correct one, and so you don't want to always take the contrarian approach. You have to just make the right decision every time,
or at least more times than the wrong one. You can make wrong decisions, just compound the correct decision.
That's right. Yeah. It's a set of a startup is just a set of thousands of decisions for a founder at least.
Yeah, it's like a life. It's like a human. It's like you just have this pathway that forks and forks and forks and forks and forks and forks and forks, and you gotta hope that the majority of those forks are leading in the right direction.
Yeah, that's right. That's right.
Yeah, I see this when advising companies. sometimes that I invest in or want me to invest, and they'll say things like, "Oh, we're gonna build on this chain because they're gonna give us a retweet," and I'm like,
Yes.
"What the
Or give us
are
a
you
graph.
talking about?" Like you need to understand what technology is gonna serve your product the best, so that you can have a successful company, not who's gonna give you a retweet necessarily. So I agree. I think that's actually a really good point that you raised. And another thing I'm curious, Akshay, you've been on the crypto grind for a while now. It is a really, really intense space to work in because it's so global. It never stops. It's so personal. Everyone kind of has your contact. Everyone can reach out very quickly. Where do you feel that drive coming from? Because ever since I've met you, you haven't stopped. You're go, 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 go. What's behind that for you?
I think there are two types of people who succeed at startups. There are ascetics, people who will just like, that picture of like you guys in the backpack office where it was lying on the couch, where they're just sleeping under the desk, and they've given up the rest of their life to focus on this, and so they're an ascetic in some way, and they've chosen actively to make that trade-off because, and typically the folks in their 20s. They understand the value of time in that period, and they're going all in on something. And then there are addicts, right? Addicts are older people like me who are like in our 30s, and we've played the game, and now we know no other way to live. I've taken the foot off the gas, and I'm like, okay, I guess there's only that long you can sit on a beach or like whatever the idyllic thing is. And you realize, okay, I played the game in a certain way for so long that now I crave the game regardless of the outcomes. You're an addict, right? So, and perhaps if I didn't find this in my 20s, I'd probably be doing drugs or something. Perhaps I already had an addictive personality. Maybe there's some part of it that already selects for this in me. And I just happen to find a sort of addiction that's productive in this sort of startup type thing. But I do get tired every now and then. It's just like, it's exhausting. It's also so stupid and it's embarrassing. Every Tuesday, you come with, there's something that embarrasses you about being in the space. Sometimes it's something you do, sometimes something that others do. But maybe that's also what makes it entertaining.
So framing, I like that framing of it being a game, because I think for me, it did feel like a progression from games I played when I was a kid, like RuneScape, going into the startup world, were different variations, but similar flavored. What are things you could leave with folks who haven't really had a chance to experience the game, who want to play the game but don't really know where to get started? What are places in which they can begin to garner that experience that will let them level up within the game?
Yeah, I've over the years, scratched out every piece of advice I had to myself and realized the role of randomness in some of this, getting to a breakout startup or whatever. The one thing that I haven't scratched out is probably the people, right? Like I think Naval had this thing about like go and work for a place that has the highest likelihood of having an awesome alumni. I think that's good. That's like a good frame. And so everybody you meet at a company or a startup, just like simulate what it would be like to like where they would be in 10 years from now, right? Like what this individual is like, track their potential and draw like that curve across your organization. If that's up and you're constantly meeting people who are incredibly driven and incredibly smart and they understand the chessboard really well, you're likely to be in a place where something interesting is going to happen. Even if that specific thing doesn't work out, some cohort of them might leave and start something else that becomes the thing. So I definitely think being around.
How do you get there though? People. Let's say you're before that. How do you break into a scene that lets you be around people like that? What are your thoughts on that?
Yeah, I actually think a lot of the good ideas are ones that people don't want, that people are finding it hard to attract talent for. I think Raj and Toli went around China or something, or Asia, to raise funding in the early days, and they came back with $0. Nobody wanted to fund a single layer architecture, right? And so a lot of this is about finding. I think is about finding underrated stuff. Now, of course, when you do find the underrated stuff, you still want to find a way to make yourself distinguished from everybody else. And part of that is, being valuable to them. So the one thing I would always do, when I quit Uber, I was just spending time traveling and sort of consulting, just bumming around for a couple of years. And then what I would do is I would just write a 6-month strategy note of the company I wanted to work with and just send it to the founder directly. And so the one piece of advice I would have is route around the recruiters, or the middle management or the hiring manager, and go straight to the founder in the early days. Because the recruiter has all the good intentions, they want to hire the best, but their inboxes are flooded and they are just going through reams and reams of CVs and whatever the recruiting tool they use, and you're probably getting 10 seconds of eyeball attention, right? But if you send an email to a founder, you're getting 2 minutes of read time from the decision maker in the company. Now, most people send emails to founders saying, hey, I would love to catch up. Should we sync up to discuss collaborate? What's the thing? Synergies or whatever, right? And so if you put in a disproportionate amount of effort in writing that 6-month strategy note and sending it, I think that has a high chance. It's very rare that fails.
It worked for me. That's how I got hired in crypto, through a Twitter DM and then a follow-up email that I spent a lot of time working on. So I actually agree with that. And then you have to just be willing to work. If you get the in, you have to just be willing to put your heart and soul into it, or else I think it's really hard to kind of level up from where you are.
Yeah, again, when we say that, I think it should be people should know that you're saying that to folks who want to play in this game, right? And need not be for everyone. And you should just have some self-awareness. And if you don't, you should try it, but you should have self-awareness of whether this is for you, this kind of grind is for you or not. And it's perfectly okay. I admire the people who are able to, work a job without having to think about what's next, or keep pushing the limits just to stay entertained, right? The kind of personalities that end up working in startups are, they are the ones who are bored easily and probably will leave a gun in the middle of a crowded restaurant too and walk away to see what happens. And so it's weaponized productivity. So
weaponized autism. Akshay, so there's a lot of technology coming down the pipeline for Solana. There's the Onza team who have been nonstop working on Agave. There's the Fire Dancer folks. There's a lot going on. Can you tell me a little bit about this? How are you viewing this? What is the foundation's view on all this sort of tech development?
I think the best way to understand this is you want to build a network that is capable of serving global demand, even if not today. You want to plan for a world where you're going to service global demand, and you want to make that bet in a deterministic way, right? And to make that bet in a deterministic way, it's not about marketing and saying we're going to bring the next billion users on chain. It's actually making the chain be able to accommodate the next billion users, right? And then letting the market take care of that second part. And of course, the foundation plays some role in it, but really it's it's a product problem, right? Of having a couple of billion private keys or public private key pairs. And so a lot of the efforts that you articulated are focused around that, whether it's Fire Dancer or having client diversity so that there's some fallback in case one of the clients has a bug, and there's redundancy, and overall building a network stack that can get you as close to the speed of light as possible at the scale of human civilization, as close to the scale of human civilization as possible, right? So that is the Solana project, which is, it doesn't accept the trade-off of being distributed and slow, right? You want to achieve near light speed confirmation times while being as globally distributed as possible. And there's a whole set of cool technical challenges that unrolls into, some of which I understand cursorily, most of which I don't understand. But if folks are interested, we are hosting a conference called Scale or Die in May, in the 19th of May in the US in New York. and so it's only for developers. All the protocol developers will be there, but it's also for application developers to understand how they're thinking about this stack, and so they should definitely attend that.
Actually, I think that's a good point that Solana has done very well, is to have developer focused events, in the sense that I think the reason people care about Breakpoint and people actually go to the conference is because all the stages are just real builders building real things versus people who paid to have a slot to speak at, which is pretty rare in crypto conferences. Is Breakpoint something that the foundation is still sort of curating and doing, or has that expanded outwards as well?
Yeah, of course. Like Breakpoint is when we hosted Breakpoint last year, we made a decision to focus on apps specifically, because a lot of the nihilism of 2024 was colored by just like all these random infrastructure projects that had no users or no developers or apps. And so we realized that Solana is app abundant, and that's a unique feature to the Solana ecosystem. And so where the part of the decision we made was to focus the entire Breakpoint conference around apps. And we said, hey, let's just be fiercely product focused and let's showcase the applications already live, not white papers, not what you can do tomorrow, not demos of what is possible, but what already is. And so it was like show, don't tell. And that actually cured a lot of nihilism, because you can now offer a glimpse into the future in a way that's deterministic, in a way that's not generalized and indeterminate, right? Like, oh yeah, crypto is going to make the future better. How exactly? Well, we can't tell you exactly how, but when we build out all these infrastructure layers, it'll be possible to move move mainstream finance onto this. And that gap is what causes the nihilism, because you're nowhere close to that today. But when you actually feature products that let you pay using crypto, when you feature products that let you earn crypto, the mobile applications that were launching when Jupiter launched, for example, their mobile app, and people realized, oh, there's a new frontier open with the App Store. Those types of things give you a glimpse into how you can get to that, fast forward to that future. So I think you should expect the same this year. We'll probably have a theme. It's unclear what the theme is going to be. We'll, as I said, crypto is both about predicting the future and reacting to the present effectively. And so as the year rolls on, we'll probably get a strong understanding of where that'll go. But one of the things we've been interested in is something I call internet capital markets, right? It's capital markets on the internet. It's native.
Talk to me a little about that. Yeah. So.
Yeah, sure. Yeah, internet capital markets is really about doing two things well. It's reducing barriers to asset issuance, and it's reducing barriers to asset ownership. And let's talk about those very quickly. If you think about what the big problem in most societies that have this large amount of public debt, including the US, is that somebody has to pay for that public debt, right? And so every policy discussion, every political cultural war is really about who pays for it, roughly speaking, right? So if you inflate currency, then the savers are paying for it. If you tax people, then people who are employed are paying for it. If you tax the rich, then obviously the rich people are paying for it. And there's like a whole there's this whole set of downstream issues from that central question. And so on a long enough time scale, as AI accelerates, a lot of people are likely to lose their livelihood as well. And so you have a fork in the road. The fork in the road is you either get to UBI, which is sort of the Vinod Khosla view of the world, where he says 80% of the jobs will be automated, right? Mm-hmm. And so most jobs will be automated. And so we need to start thinking about UBI, okay? And that's like a consumption or welfare economy, right? Welfare economics. Or the other fork which we propose is universal basic ownership, where anything productive in the economy, whether it's done by people or robots, you should have the ability to own. In other words, take the cap table of everything and scale it infinitely, right? So if there's a coffee shop in your neighborhood, if you really like the coffee shop, you should be able to go in there and there should be a QR code on the wall and you should be able to scan that and buy a few tokens, and that gives you ownership in the coffee shop, and that's how you support your neighborhood coffee shop. And they pass on revenues to you. If there's a company that wants to go public, they should just, in 5 years from now, go public on the internet. Not on NASDAQ, not on London Stock Exchange, but just online. And on the back end, it's just a capital markets infrastructure of Solana, right? Actually, a number of public companies have, and so let's talk about why this is important. So if you want, in other words, if you want a world where you have a stakeholder, like an ownership economy, you have to make it trivially easy for people to own assets. Otherwise, people are going to get left behind, especially if asset prices are inflating, way faster than the median wages are growing because of like this public debt situation. The asset bubble is an accident, right? It's a byproduct of basically this QE and fiscal largesse. And so you want to reduce barriers to asset ownership. So that's the context of this. Now, how does Solana make this possible? You can now get US dollars on a mobile phone app. Previously, you could only get cash, or you had to fill a couple of pages of forms to get an offshore bank account if you're not in the US. If you're outside the US and you wanted US dollars, then you could only get access in these two ways. But today you can download a browser extension or a mobile phone app whose icon is a ghost, and you can get access to US dollars. Similarly, you can get access to US Treasury, right? Whose on an app whose icon is a school backpack, right? By just swapping to USDY on where previously you needed to go on like this formal website, Treasury Direct, and you need .gov, and you have to have an account on it and all these things. Now you can download mobile apps and get access to assets. And what has happened is, it's not that the KYC, the regulations have been abstracted away. It's that the regulations have moved to minting and redemption. They've moved to the corners, right? So that reduces barriers to asset ownership. And then on asset issuance, you will have a world where today funds are tokenizing. But as I said, tomorrow, as securities laws ease up, you'll have a world where people will just list on the regular stock exchange, right? They'll just do a direct listing, and then they'll tokenize that offering on Solana to give access to that asset to global investors around the world. And so, you go public in the US largely because of the deep capital markets it has, but I think over time, the internet will have the deepest capital markets, and you will just go public online. And so asset issuance will become trivial easy. I mean, today you can issue an asset by clicking 2 buttons on pump.fund. There's no reason that exact same infrastructure is not useful for the real economy, where companies want to float, IPOs, perhaps, or raise.
How long do you think it'll take to get through all the red tape for something like this to happen?
I think it's faster than most people imagine, because crypto is one of these things for two reasons. One is because meme coins are legal today, whereas capital, the capital markets access to Main Street businesses or smaller companies that may not be serviced by the big banks to go public are not, which is kind of crazy. And so that something has to change. And the second is, crypto is one of these things that doesn't wait for regulation, and so a lot of this activity will just start to happen in some roundabout way. Like governance tokens was like one way where this happened, where you had to craft them as governance tokens in order to not be foul of an outdated securities law. And similarly, I think there'll be some new version of this where maybe it's a combination of sandboxes and interpretation of existing law that allows companies to go public, but it'll just start to happen, and eventually the law will be forced to catch up and update.
Do you think we'll see liquid US stocks on chain anytime soon?
I think as of last week, there was something in Arbitrum. I can't remember the name of the project, but they had the highest volume ever on the S&P, on the tokenized S&P 500. So yeah, I'm optimistic that like access to US capital markets, or generally the products that are hard to access, will be easier to access on chain, and that will start to drive volume. There's a bunch of like money sitting around waiting for opportunity on chain, and so that'll eventually go into these products.
And also just a lot of people around the world that even if they do have some funds, they don't really have anywhere to put it because they can't get dollars, they can't get US capital markets, they can't get these assets that are inflating, which actually is a pretty bullish case for crypto in general. My last question for you, Akshay, is for the Solana communities, for the ecosystem, how can people be more successful non-CMOs? How can folks contribute to the ecosystem in maybe both official and non-official ways?
Yeah, so I want to be very specific when I answer this. So it's helpful. Make more video if you're an X. Because the algorithm, like if you just open your X right now and just scroll through, most tweets are videos. Like the most things you're watching are actually videos. It's prioritizing video. This may not always be the case. Like video is a tactic, but for now it's a strategy, right? And so lean into the medium that is getting the widest distribution so that your story gets the reach it deserves. So I would say that's a tactical piece of advice. And that also makes it easier for us to share it further, right? So if you make high quality video. And then the second thing I'd say is figure out what stories are like worth telling and tell them, and then feel free to pitch a heightened version of that, like or an elevated version of that to the foundation. And we are willing to work with you on figuring out how to finance that project or whatever it is to get it to life. But do the pilot version of it, like think of it almost as a pilot before you come to us, because that's easier for us to evaluate. I'd say those are the two things. But our users continue to be our best marketers. Our ecosystem folks, such as yourselves, continue to be our best marketing and onboarding for newcomers. So thank you for everything you folks do, and we're here to serve in any capacity that we can be useful in.
Sweet. And Breakpoint this year is where? Abu Dhabi?
It's in Abu Dhabi. Yes, it's
what are the dates?
Back of the Abu Dhabi Finance Week. So please go on to solana.com/breakpoint and you will be able to buy tickets in short order. But if tickets are not live yet, know that depends on when this goes live. They will be soon, right? And it's happening between the 11th and the 13th of December in Abu Dhabi, just after the Abu Dhabi Finance Week. And so we expect the Abu Dhabi is called the capital of capital. A bunch of Silicon Valley funds, like hedge funds, come to raise money here. And so because the theme for this year is likely to be around internet capital markets and the role of capital markets in the Solana ecosystem, that'll be a valuable opportunity for folks to come and take advantage of.
Can you guys sponsor the wave pool in Abu Dhabi so we can get some surfs in on the
You'll have to write to Ellie for that on our team, but we'll see what we can do.
Awesome, Akshay. Thanks for coming on. Good seeing you as always.
Thank you so much for having me, Tristan.